India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Thursday morning. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. You know, yesterday, same time, I was saying how it was looking like not the retreat of monsoon, but the onset of monsoon. I mean, last night it kind of gave you, for those of you who've seen the September 26th, it was, I think, 2004 or 5. I mean, it kind of gave you those
July
vibes.
26th.
July 26th.
July 26th, 2005.
These are visuals from last night, and we were just discussing before we hit air about how maybe a colleague, Nigel was telling us how a colleague maybe reached early this morning.
Indeed.
So, crazy scenes out there, and just sort of hoping that all of you are safe as you watch this broadcast.
Yeah, absolutely. And this one took Mumbaikars by surprise. We're not used to seeing this level of rainfall and waterlogging and traffic chaos, but the good thing is actually the red alert was on till today morning. Schools have been shut, but it's holding up for now. So hopefully it's going to be, back to business soon enough.
Well, indeed, it was a difficult evening for a lot of people yesterday. You know, the cabs, auto rickshaws, trains, everything. Transportation came to a standstill. And I think yesterday, if you were actually stuck somewhere, if you just stayed indoors, it would have been better. But that's hindsight. Authorities have taken the call, I think, wisely. They took the call last night itself to shut schools and said, just stay safe today. So, guys, just stay safe. Focus on the television. We're going to get you all the updates with regard to today's market action.
And as they shut schools, no rain today.
Absolutely clear, so far.
Can't blame them, right? I mean, it looked pretty bad, and you had to sort of take a call on what things will look like today. Let's rewind the clock back and tell you what you need to know as we begin today's session. U.S. equities, absolutely quiet. We'll begin there because yesterday we had a pop, and I'll get to that pop in just a bit. But, the market last night pared back. Actually, equities pared back. Dow was down about 3/4. The S&P was down about 0.2%. NASDAQ was flat. Russell was down about 1.25. So it was more down than up in that sense. Yields, they went up about 5 basis points. We're back at about nearly 3.8%. The one sort of macro market which had a decent move was the dollar index, which basically had almost its best day in the last 1 month. It went up 0.7%. We're back at about 101. It did briefly break the support zone. 100.5 to 100.8 is that support zone, which is a 20 weekly moving average. A bunch of lows from 2023. It broke through that support briefly, and then now we've seen a decent bounce. Oil prices 2% lower. We're at about 73.57. We were 75 as we were starting, the same program yesterday. Gold prices continue to move higher. That's made a new, fresh all-time high. The question is, does it have more steam? So far, most of this has been led by Chinese retail buying. I mean, India is, of course, a big demand driver as well, but very little by way of Western demand. So we'll see, how much this has got to go. Later tonight, out of the U.S., you've got lots of Fed sort of speakers who'll weigh in. Actually, it's, I think, about 4 or 5 Fed speakers and voters will speak, and you have some macro data, durable goods, personal consumption, GDP, et cetera. So just to circle back the levels, we've got the Nifty, which closed slightly above the 26,000 level. And it was the definition of a 3 p.m. move yesterday. Exactly at 3, the market started rallying and we went up 90 points from that 3 p.m. to the day's high. And then, of course, we came up a little bit towards close, but 0.25% up on the Nifty. We need to, frankly, at this point, I'm not very clear if this is a fresh move higher or if this is just the market which is starting to mature a little bit. How will we know? You got to basically, the index needs to cross above the 26,245 level and sustain above it. It's some distance away from where we left off yesterday, but it's got to do that. I think that will decide whether this is kind of stretching even more or we're at a point where perhaps there is some consolidatory, even some pullback, which is around the corner. A negative daily close, I think, will be also one of the indicators. Supports, by the way, in terms of levels, stands at 25,763, which is the 40-hourly average. Nifty Bank needs to break above the high of 54,247. And here, supports come in at the 40-hourly, the level which changes, but, I mean, it's been the hourly average support. 53,566 is that particular number. GIFT Nifty should indicate what the start is looking like as we kick things off. It's another 70 points higher. So 26, close to 26,160 or so is where the start is looking like, with about 55 minutes to go for the pre-open session. Surabhi.
And the reason why the GIFT Nifty is showing such a bright shade of green is because Asia is actually looking very, very good right now.
Yeah.
Most of the markets are rallying. I mean, Japan's up about 2.5% actually. And China, it's continuing its party from, of course, the time that the PBOC announced its measures. So that's the Hong Kong market up another 1.5%. I mean, Taiwan, Japan, you name it, all those markets are rallying. By the way, the Chinese market was on a 5-day winning streak, the mainland China market, if you take the CSI 100 as a barometer, the CSI 300 as a barometer. And that's only extending today. So good news coming in across Asia and no concerns whatsoever from the neighborhood markets. But if we talk about sort of the moves here, the fund flow picture yesterday, we hit this 26,000 mark. The market did nothing. Then we had a late surge. We hit it and we closed just around it. But there is volatility that's creeping into the market. So let's keep that in mind. On the fund flow picture, the FII figure was a sell figure, actually. They sold stock worth about 1,000 crores in the cash market. Domestic institutions were buyers of about 1,800 crores worth of equity. On FIs, by the way, something interesting. SEBI yesterday said that they will be setting up a foreign portfolio investor outreach cell. It's a bit of a mouthful. Basically, an FPI outreach cell. The aim is to have more direct engagement with FPIs and to ensure that any of their issues with respect to setting up shop here in India and market access, all of them can be addressed in a more seamless fashion. Remember, some of the foreign participants like Chris Wood of Jefferies have been making this point that coming in, registering and just starting business here in India is very, very difficult, which is why some FPIs stay away. That's one view. Anyway, we've seen the regulator make a couple of moves and steps in order of easing that process. Quickly moving on, today on the bond market side, let's watch out for bond yields and the action there because the second half borrowing calendar is going to be announced. Remember, the gross borrowing for the year was about 14.1. As we end September, the government is expected to finish off about 7.5 lakh crores worth of borrowing. So a lesser amount remaining for the second half. We'll have exact figures when that announcement is made. And of course, the bond market has been rejoicing and rallying, bond prices hitting highs not seen in the last 32 months. And the yield has been cooling off on anticipation of rate cuts eventually from the RBI and of course more foreign money coming into the bond market. Moving on to some individual stock names, whenever there is any sort of, business diversification, that always catches my eye. And PB Fintech is one such stock, and we'll talk about it because we are picking up from sources that they could be getting into healthcare and they could be setting up hospitals. So not entirely unrelated, but yes, it's a very different business than what they're engaged in right now. So watch out for that. And by the way, speaking of policy, Karnataka is looking at an EV policy for the next 5 years, and they could be offering a lot of incentives, including exemption on road tax for vehicles, EV vehicles, which are below 25 lakh rupees in value. So let's see if that causes a flutter on Ola Electric or, all the others as well in the EV ecosystem. So plenty to keep us busy. But the question is, can the bulls sustain this move above 26,000?
Well, that's right. And yesterday we had that late flurry because the Nifty Bank, that's the one that played out the weekly expiry. It played out the monthly contract expiry as well. And that was the reason that we did see a big pullback in the last 1 hour or so. So it's a technical factor, so to call it, that led that index higher. And looking at the rolls, the rollovers for the futures contracts, well, it's relatively low in comparison to what we saw in the previous contract. So that's why the total open interest on the Nifty Bank is relatively lower. When we got into the September series, it was much higher, which was a bullish indication. So let's see how that goes. Well, in terms of the global tailwind, as you all mentioned, the dollar index is weakish, still holding below that 101 odd mark. You have Brent crude prices cooled off as well. And that's a tailwind from an India economic as well as macro perspective. And that's something that will hold us in good stead. Moving to the FI positioning, well, they continue to remain net long, 75% of the positions on the long side and 25% on the short side. And as we've been making this point, the FIs and the clients, they're on opposite ends of the spectrum. FIs net long, clients net short, and that number has been more or less constant. But the India VIX, that perked up for a couple of sessions and that's cooled off. And that's normally a bullish sign. You don't want to see the VIX run away beyond the 15-16 odd mark. Yesterday as well, it cooled off by close to around 5%. Now, today we'll have the expiry that will play out for the Nifty. And there is some call writing that we have seen. 26,050, 26,100 call. Both of them have seen a fair bit of open interest build up. And the bears believe they can defend higher levels. But the good news is on the downside, we have been seeing writing at around this 25,900 put, which brings us to the levels. The bears will get a little bit fearful once we get past the 26,100, 26,150 odd mark. So this is the crucial resistance zone just for the day. But the reference points on the downside comes up for you on the screen. The options data suggests that. And yesterday as well, we went closer to around these levels. So that's the important level to track. On the Nifty Bank, you wanted to get past the recent high and hold above that level. While the reference point comes in a little bit lower at around this 53,700, which is a support on the downside itself. The stock that I'm tracking today is 5-star. Yesterday we had broken that exclusive that there's a possibility that could be a large trade that takes place. So that large trade gets out of the way. I want to see what happens post that. Because if you look at the valuations and you compare, say, a 5-star with SBFC, well, on a price to book multiple, it appears it's more or less similar to what we have on SBFC. But otherwise, the return ratios are much more favorable for 5-star in comparison to SBFC. And DAM Capital, they have put out a note. They believe that there is a good scope for re-rating for 5-star from year on. Post this block deal, I'll be keeping a close eye on this stock. So let's see how that goes.
Okay, all right, got that. Nigel, thanks very much. So we'll keep an eye out specifically on some of those stocks as well. There's, of course, a lot to cover as we go forward. And, of course, plenty of stocks to talk about as well. But we'll kick it off with the equity call of the morning. Lawrence Belanco of CLSA says that global markets have seen further follow-through action following last week's breakout. In the US, he says the cyclical versus defensive ratio has broken out of its August to September basing pattern. The consumer discretionary versus staples ratio is within striking distance of the mid-July highs. And the investment grade corporate bond ETF versus the US 7 to 10-year Treasury bond ETF has broken out to new highs. He says this is a constructive backdrop.
Okay, well, that is the move which is coming in. And now Lawrence also says that while we have no new momentum signals for the Nifty's breakout to new highs from a behavioral aspect, the index continues to respect supports provided by the 50-day moving average post the election volatility back in June. He says as such he would keep it simple and give the benefit of doubt to the upside and the continuation of the current uptrend as long as price action continues to respect supports provided by the rising 50-day and, of course, the which currently stands at 24,921 levels. Okay, well, that's the technical aspect. Let's get a quick fundamental view as well. Matt Orton is U.S. market strategist and chief market strategist at Raymond James Investment. Matt, of course, has liked India for a long time, and I think he's overweight the market. Matt, good to have you with us here. You may like it, but most foreigners are still staying away because they may like it, but they are staying away and not putting the money in, and they're complaining about valuations. Fair enough. But I'll get to that in just a bit. But very near term, do you think all this stimulus out of China, and we had a guest yesterday on the program in India who was saying that maybe over the next few days he would watch how flows are beginning to shape up to determine what near to medium term looks like, whether it will excite foreigners, because the Chinese market's trading at about 8 to 10 times. We're trading at about 22 times. Just your thoughts.
Yeah, good morning, Prashant. Great to see you. And China is certainly an interesting one. The market has taken off over the past couple of trading days. But when I look at what actually has happened, what the PBOC has laid out, in my opinion, it's incremental, it's insufficient, and honestly, medium to longer term, it's going to be ineffective. It's the same exact thing that we've seen before. We saw it a little bit earlier this year. We saw the same types of policies last year. It's not actually addressing the fundamental economic challenges that the Chinese economy faces, which is a consumer that saves more than they spend, and there's dampened consumer sentiment as well, given the equity market. So I think this is a move to juice the equity markets and maybe try and get institutions to take a little bit more leverage. It's working in the short term. What I'm advising to clients is if you want to get exposure to this, it's a trade. Perhaps rent the trade, rent the upside through maybe call options. But what I do longer term is this is a move I would be fading. And even though there's such a big valuation discrepancy, like you pointed out, China is incredibly cheap, but it's cheap for a reason. It's not to say there isn't value in China. There certainly are a number of companies that are very interesting. But from a longer term perspective, the growth story in India is so much more compelling. There's a much more friendly regulatory environment. The economic growth is there, and it might be more expensive, but it's justified because of the earnings and economic growth that's behind it. So I would say stick with India, stick where there's real growth, not growth that might be a facade for bigger problems.
Oh, we love the sound of that, Matt. It's music to our ears. Basically, what you're saying is China is a trade and maybe India is the bigger investment that you could focus on. Got it. But, you know, just to play devil's advocate and to make the case that the other side is making, some worry that we are maybe in the late stage of this bull market cycle or maybe even the earnings cycle. I was speaking to a domestic fund manager here who was saying when they talk to corporates, the worry is that the first quarter you could ignore because we had domestic elections and maybe business activity slows down a bit. But, you know, I think now we're moving to the litmus test in terms of business growth, earnings, and whether the market can sustain at these levels. What's your reading?
Yeah, it's a really good point, Survi, that you bring up. And I think what you've been seeing, especially over the summer, with a number of the high-flying companies that started to either pull back or flatline a little bit. What's interesting is it seems to be almost a rotation towards higher quality, maybe garpier type companies. It's not so much a rotation out of India or worries about India broadly speaking. I think it's just changes that are taking place beneath the surface. And when you look at what has really taken off over the past couple of weeks as the broader indices have rallied to new highs, a big part of it are companies that have actually justified those earnings. So some of the names that I favored in the financial space, we've talked before about ICICI, but that's a high quality compounder that's delivering 15, 17% ROE on a very stable basis, growing loan deposits, and it's offsetting perhaps some of the net interest margin worries of the potential for lower rates by increasing deposits in its large wealth management business. So that's a high quality business that's taken off, and you're seeing a number of companies like that where the rallies are more justified, and those where you might have more questionable fundamentals that may have rallied just because of infrastructure plans, because of enthusiasm after you got some of the election digestion through the system of the market. You've seen those names more flatline. So I am encouraged. The main message, though, to client survey is don't chase this market higher. Let there be pullbacks like we saw a month or so ago, and let that sort of downward trend for higher quality companies be a good entry point.
All right. Hi, Matt. Morning and good to see you. Vin, what about the IPO market here in India? That's very, very vibrant. Some worry that when the IPO rush gets too fast, too furious, then it's a cause of concern. But it could also tell you the kind of enthusiasm you have towards India. I'm talking about the Hyundai IPO, the Swiggy IPO. What's your view?
It's encouraging because you're seeing IPOs in India and we're not really seeing them in the US. I think it speaks to regulatory environment. I think it speaks to innovation and the opportunity set longer term, and the enthusiasm for public companies as opposed to private. So it highlights the distinct nature of both of the markets and why having exposure to a growth market like India is a very good complement to a portfolio that has US exposure. I still like the US. It's still significant overweight in my portfolios, but this IPO market, I think, worries me less because it's backed by a lot of enthusiasm, strong technicals across the rest of the market. And again, a lot of these IPOs are leaning into stronger fundamental themes, burgeoning domestic demand for vehicles, companies that have presence in the EV space that's continuing to grow. So I actually think it's a signal of strength longer term. The IPOs specifically, may be interesting, maybe not, depending on where it actually prices out. You tend to see these names fall a little bit after the initial trading actually starts, but I think it's a good, healthy sign of a vibrant market.
Okay, all right. So that's a thumbs up even to the IPO market. Matt, really good listening into you today. I'll tell you what, because we sitting here sometimes question what's going on, and it's healthy questioning, right? That's our job. But you tell us, since you're completely sort of sold on India and you believe in the story here, Apart from names like ICICI Bank, what else are you looking at? What else would you want to own in this market?
So, Surabhi, a good example of a name that's kind of, moved downward a little bit, going through a consolidatory period is Adani Ports and Special Economic Zones. It plays into the overall theme of longer-term Indian growth, but it's a name. It's the biggest port operator in the country. You're getting about 15% revenue and EBITDA growth, which I think is very, very encouraging. And you're continuing to see investment not only in India, but also in other emerging markets. So there's a lot of different levers this company can pull, and it's not really constrained in its ability to finance its operations. So that, I think, is an opportunity where valuations have come in a little bit, and it might be an interesting opportunity for investors to get some exposure if they don't have any, and a different way to perhaps play the infrastructure growth of India type of theme.
Matt, lovely speaking with you. Thank you very much. And Surabhi, I think that was a good point, right? I mean, that sometimes sitting here,
yeah, we question what's going on. We wonder if it's too good to be true, but good to get your external perspective.
Someone who's investing in other markets as well, and then, the view on India. So I think it kind of stands out, and so good to get that, Matt. Great to have you with us here. Appreciate it. Well, I think, we'll take a quick commercial break here, but we'll just quickly tease out the stocks which our research team will present to you in just a bit. We're looking at Tata Motors, Vedanta, Zen Technologies, Minda, Krishna Diagnostics, which are perhaps going to open in the green on the back of news flow. 5-Star Finance, ASK Automotive, PB Fintech, Ease My Trip, KPR Mills are the stocks perhaps which will start in the red. Stay with us.
So we've been telling you that the cues across Asia are positive, and we're likely to get a start on the green side of the screen. There you go. The implied open is looking like, we could get a 60-point pop. The question is, what about individual stocks? So let's go across to our team, and they're all standing by to bring you the CNBC-TV18 list of top 10 stocks to watch. Guys, good morning. Vinny, you kick it off. Eye on Tata Motors today. Tell us more.
Absolutely. The eye on Tata Motors, we're expecting it to see a bit of a positive move. Why? Because the JLR, the arm of the company, is planning to invest around 500 million pounds, and this is for retooling of its UK plant. Electric vehicle is what they want to focus on here, and that will be the first plant for the company which will be completely producing only electric vehicles. Now, do not forget that the company has already spent 250 million pounds previously on this, and the aim of the company, the strategy of the company is to reimagine their strategy and become an EV company, and JLR electrified completely by 2030. So key focus on that, making further investments in terms of the strategy that they have laid out.
Okay. All right. Vinny, got that. Thanks very much for it. Let's quickly get to Vedanta. Nigel, we're looking out for yet another dividend?
Yet another dividend. They're saying that they're going to consider the fourth interim dividend for this year. We're only halfway through. And they've given the date as October 8th. Just to give you a quick rewind, in the last 6 months or so, they've declared dividends amounting to around 35 rupees. Wow. That's great news. And now they're bracing for another one. Couple of alerts come up for you. The promoter entity, they are the largest beneficiary, right? Because every 100 rupees that's declared, they get around 56% of that, because the promoter entities which held mid-60s, that's come down to around that 56% on. And why is this important? People wonder, why is Vedanta paying out so much dividend? Now, since the promoter entity is getting 56% of that, it helps deleverage things at the promoter end. That's Vedanta Resources. So we'll keep an eye out on this. You have the tailwind with commodity prices as well as silver prices. Just to give you an alert, in the last few sessions, the stock has already seen a good run, from around that 450 to 480. But it's a best placed stock if you're looking at a commodity melt up. So that's the one, going with green on that stock. But let's hop across to Vivek. He's here to tell us about a couple of large trades that we're looking forward to. Hi, Vivek. Good morning. You told us towards the dying minutes of trade yesterday that watch out for 5-Star. Expect a large trade. Bang on.
Well, good morning. That's right. Just like we mentioned, towards the dying minutes of trade yesterday, that a clutch of PE investors, who collectively held over 25% stake in five-star business finance, were looking to pair close to 20% stake and largely along expected lines. Yesterday the block deal was launched. The term sheet indicates that PE investors are collectively looking to sell close to 19.3% stake. The floor price for this particular block deal is at 768 rupees a share, indicating that the size of the block is a little over $500 million. That is close to 4,300 crore rupees. So it's a large block deal. Amongst the sellers, two Sequoia funds, a KKR fund and TPG Asia are amongst the sellers. Important to note that there is now a 12-month lockup on further sale of shares, that the remainder of the stake that they will continue to hold. The other stock on the radar is ASK Automotive. Now, there has been an OFS launch. One of the promoter entities, Kuldeep Singh Rathi, who held a little over 40% stake in the company, is looking to pair 6% stake, and the route that he has chosen to take is the OFS route. So the base size is 5.5% equity, and there is a green shoe option or an upsize option of another 0.5% equity. Now, when you're talking about the floor price, it's at 433 rupees a share. So the total OFS size is a little over 500 crore. Going with red on both of these names, at least at the open.
Yeah, because then people queue up and there are enough buyers, and by the end of it, the stock sometimes turns into green. That's the nature of the market. Got it. Vivek, thank you very much for that. Back to Vinny. Now, a lot of us would have noticed that PB Fintech was under severe pressure yesterday. It was down 5-6%. And today we have news on the company looking at some business diversification, Vinny.
Absolutely. So what we understand and from sources that PB Fintech may actually start exploring to enter the healthcare space. They may even open up their own chain of hospitals. So yes, that's what we're keeping an eye out on. And PB Fintech wants to tap into this level of value creation in the healthcare business. So that is a focus area. Now, they came out with a clarification on this as well. In the previous con calls that highlighted analyst call that they would be looking at such a diversification and they are aiming for it. But as of now, there's no such decision that has been made. The company wants to focus on, bringing the insurance space together, smoothing it out for customers. The strategy is that insurers, even the customers and hospitals, all are working together for easier claims. So that is their strategy going forward. As of now, there's no decision made. They've not found out of what they want to do going forward. But yes, if this does happen, it's a bit capital intensive. So that is why we've seen that fall coming in the stock as well. They will have a lot of capex if they actually start their own chain of hospitals. So bit of a red for PB Fintech in the short term, but long term, surely a value creation that we're watching out for.
All right. It's interesting, right? Insurers going into hospitals and hospitals getting into insurance. That is Narayana Hrudayalaya, if you remember. So it's like a lot's happening in that space. But as Vinny said, stock's been a little worried, 10% down in the last 2 days or so. Vamakshi is here with more stocks with news flow. Vamakshi, take it away. Morning.
Well, good morning, Prashant. Let me first start off with Zentech. The company has launched remote-controlled weapons and surveillance systems, and this has been done to strengthen India's defense capabilities. Now, keep in mind that, of course, this is a positive development, but over the last 2 months, the company has in all launched 8 new modern military equipment. Of course, this is yet to materialize into earnings, but all of this put together provides a new leg of growth for the company apart from their defense simulators as well as anti-drone systems. So, given that development, going with the green for Zentech. But apart from that, watch out for Uno Minda as well, and that is because its arm Minda Onkyo India Private Limited has entered into a technical licensing agreement with Hyundai Mobis Company Korea. The agreement will enter Minda's arm to manufacture licensed products, specifically speakers for Hyundai Mobis. So given that development, going with the green for that counter as well. And lastly, let's focus in on Krishna Diagnostics. The board has given a nod to the company to acquire nearly 23.53% stake in Apulki Healthcare. Keep in mind that Apulki is engaged in establishing, operating and maintaining hospitals focused on oncology as well as cardiology. With this agreement, Krishna gets exclusive partnership of operating and maintaining the diagnostic services of Apulki's hospitals. So given that development, going with the green for Krishna as well.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's hop across to Vivek. He's here. He's tracking some large trades as well. Vivek?
Well, that's right. We'll talk about some of the large trades that took place in trade yesterday. Yesterday we did tell you about EasyTrip and how there was a large block deal expected. We were anticipating close to 8.5% of a promoter stake sale. But as per, what has been uploaded onto the NSE block deals, the promoter Nishant Pitti has sold close to 14% stake in the company in yesterday's trade. A few buyers emerging over there, Kraft Emerging Market Fund and Corecom Marcom Fund. Of course, it's not been offset completely. The buyer list still elusive given the fact that there appears to be buyers who have been less than 1% of the total trade taken yesterday. The other stock on the radar, KPR Mill, Again, over here, the promoter has spared stake worth almost 970 crore. 3.1% equity is what the promoter KP Ramaswamy has sold yesterday. Amongst the top buyers, SBI Mutual Fund picked up almost 2.8% stake in the company. So again, KPR Mill, a large block deal where the promoter has spared part stake.
All right, Vivek, thank you very much for that. So lots to keep track of and lots to discuss as we go forward as well. So just a quick summation of everything that we put out for you. A recap, that is. So on the positive side, you have Tata Motors, Vedanta, Zen Technologies, Ono Minda, Krishna Diagnostics. Stocks with negative news flow are 5-Star Finance, ASK Automotive, PB Fintech, Ease My Trip, and KPR Mills. We'll take a break. We are back. Deepan Mehta of Elixir Equities on the other side.
As promised, let's get some fundamental analysis going on the stocks that we listed out for you. To help us out, we have Deepan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Deepan. Good morning and good to see you win as always. Deepan, I wanted your view on PB Fintech. There's that report that we had put out actually exclusively that they're looking to enter the healthcare sector. Last couple of days, the stock appeared rather nervous. I think it's down close to around 10% odd. What's your view on this? Sometimes in a bull market, you get away with these diversifications. Sometimes, the management's clarification that it's complementary in some way, you get away with it. But sometimes the market doesn't like it. They want you to stick to the core business. Your view on the stock?
Yeah, good morning, Nigel, and thank you for having me on your show. I think that they will spell out the strategy going forward. And PB Fintech and all these new age, new generation companies are heavily influenced by institutional investors, private equity investors who have invested and are presently invested in these companies. So they take a lot of strategic direction from their shareholders, considering that always the management holdings on the lower side. So I'm sure there's a coherent strategy behind this move to get into healthcare, and they will perhaps explain it over time. I'm sure it will not be earnings dilutive, nor will it impact the return ratios. But there's no denying the fact that the company is going from strength to strength. And on the whole, this entire insurance distribution business and the loan distribution business has got good traction. And I think that PB Fintech also will get solid into profit over the next 2-3 years or so.
So, Deepan, just to press the point, you won't be concerned, two things. One is that it's a platform company. And now, if it indeed gets into setting up its own hospitals, then, that's a capital-intensive business. That's one. And the second, at a more sort of, academic level, many a times, most of the times, in fact, running a hospital and running an insurance company are two very different businesses at odds with each other. The hospital owner will always want to charge more, and the insurer will always want to ensure that you pay as less as possible or as efficient as possible. So, thematically, aren't they very different businesses?
Yeah, and actually, PB Fintech is not an insurance company. So, it's like an insurance.
Exactly. It's in the middle. It's been the bridge, but now I don't know. This is a whole new thought process here.
Well, all I can say, Survi, is I can trust you to get the management on your channel and quiz them, as you always do. I'm looking forward to that interview. All I can say is that knowing the profile of the company and the management, they will not make any strategic move so sharp which will affect creation. I think a company like PB Fintech, Zomato, Paytm, they're very focused on creating value for minority shareholders, and they will not do anything to dilute that particular strategy.
No, absolutely. Got that. Just a quick word, Deepan, these big IPOs which are coming up, right? Hyundai is the big one, planning to raise $3 billion. What's your sense? Have you given it a look? Should one start to put some money aside when it comes? I think about 16-17% share of the market in terms of total volume of cars sold in India. Maruti is at about 45%. Go on.
Yeah, Prashant, good morning. Yeah, absolutely. I think that Hyundai will be a very successful IPO, and post-listing also a lot of investors, retail and institutional will line up to include in their portfolio. And I think that their strategy, their models, especially the EV strategy seems to be better than even Maruti. And look, the automobile industry has been a good value creator. There are very few listed stocks, and now Hyundai also will join on the four-wheeler side. So very positive, and typically MNC companies have a fancy on Indian stock markets, and I don't think this one will, not meet that bar as well. So looking forward to the IPO of Hyundai, and I think this Diwali we're going to have a blockbuster IPO Diwali, almost 50,000 crores worth of IPOs coming in. I think this NTPC Green also is one if valuations are attractive, and there is Swiggy also which is coming through. So I think that investors have to keep some money aside to look for applying for these IPOs, and any allotment I think will be like a absolute lottery, as we have seen in Bajaj Housing.
A point taken, Deepan. So there are people who are worried about a lot of the supply coming, but I think you're not in that camp really, right? I mean, there's enough demand, and that's kind of creating its own supply as well, and some high quality paper, as you said. I just want to quickly play out what Manish Chokani told me about this amount of supply which is going to come, and why that is necessary as well, because otherwise, you basically risk what he called a melt up, which is not good, at least in the long run. Listen in.
Great that we are going up on a wall of worries in a way that every time we meet, we are worried about, is this the end? Is this market going to fall? Will the investor flow stop?
Correct.
Will people run away? Markets don't climax at periods like that. And this seems to be more like the 90s bull market, where small caps were doing phenomenally well. And what tipped it eventually, of course, one was the Asian crisis, which happened outside our control. And B, it just got overwhelmed with supply. And that's really what capitalism should do, that prevent what I call that melt up, where the entire market goes up 10x in a decade. And then you don't see that prices for, maybe next 10 or 20 years. So I'm hoping we don't get a melt up, and supply response takes care of it. And supply is coming, but it's still what I call a quadrant 3 or quadrant 4 level supply. The big guys haven't yet come. And in the bigger ones, if I take the top 10 companies, no one is supplied. Having said that, the owners of those companies, whether it's BAT selling down ITC or Singtel selling down Bharti, that's happened. But it's not like the Reliances or the Tatas or someone has come with massive issuances, which I think is around the corner. It should come.
I mean, bankers we speak to tell that over the next 12 to 18 months, about $25 billion worth of IPOs should happen. But that is, I'm not sure how much of the...
So, Prashant, 25 also, I'm saying, is a small number now. It's a $5 trillion market cap. So if you don't do 50 billion, is 1%. So issuance is, the government ought to be doing 25 billion. The larger groups easily can take 25 to 50 billion. And this is combination of primary and, of course, QIPs and so on. We've seen promoter selling, we've seen PE selling, we've seen MNC strategic selling, and it's gone from across the world, right? If GE of US has sold, Whirlpool has sold, BAT has sold, Sumitomo from Japan has sold, Singtel has sold, and now Hyundai is approaching the market. So all these chaps are getting it right. But we still haven't come and raised the money.
And that will happen according to you?
I think it's inevitable. I mean, that's what capitalism is, right? That demand for paper will create the supply.
Will create the supply, and Manish is not worried. Deepan, you're not worried either, right? I mean, that's what I could take away. I hope you heard the soundbite. So Manish's view is we should do $50 billion. Not just IPOs, QIPs, etc. We're already, I think, in the ballpark. But your sense?
See, Prashant, all we can analyze is the fundamentals of the company and the economy and the industry. How much of supply will come and what the demand is are beyond our estimate. You just cannot estimate or put a number on these things. And more supply creates, attracts more supply, and more demand also creates more demand. That's the unique thing about capital markets. Higher the price, higher the demand, lower the price, lower the demand. That's a unique feature of capital markets. And what we are seeing is like a once-in-a-generation transfer of wealth from other asset classes into equity. And at the same time, there's adequate supply also coming through. At the same time, there's a lot of froth also in a few names within the market. So we are in a classic bull market. And really, I cannot make out a case where even our 10% up of a correction can take place. I think bad news is being used to buy even more. And how much money on the sidelines also is difficult to say. But I would say that the only warning sign I'm looking out for is the failure of a good quality IPO when it starts to list or it doesn't get subscribed. or it lists below its market price, that perhaps would put a kind of a end to this phase of the bull market, but I don't see that happening in the near future.
All right, Dipan, I wanted to ask you about the other large trade that we're looking forward to today, that is on 5-star. My colleague Vivek yesterday gave us a heads up that that's a possibility. And sometimes, the stock price seems to be range bound till this large trade gets out of the way. Now, there'll be a cooling off period for the next many months, so that you won't get additional supply coming in from those entities. What's your view on the company? I'm looking at a DAM Capital note today, and they're saying on a price to book, 5-star and SPFC, they trade at similar multiples. But on a PE, there's a sharp discount, and the return ratios actually are better for 5-star in comparison to SPFC. Your view?
I think a lot of NBFCs are trading at attractive valuations. A lot of banks also are trading at attractive valuations. But the thing is that we have very high ownership in the bank NBFC space across portfolios, not just with us, but I can see with even a lot of other investors. And that's keeping the valuations pinned down. But at some point of time, as we are seeing rotation in leadership, rotation of money moving into different sectors, something similar will play out also with banks and NBFCs. And that's one pocket where valuations are still reasonable as compared to growth rates. And still it's kind of decent environment for them. So very positive on a company like this and, providing an exit opportunity for investors. I would say that, new investors will come in and who will perhaps, support the management and take the company to greater heights. So very positive on banks, NBFCs and 5-star also in general.
All right, Deepan, got that. So that's banks and NBFCs, which are in focus at this point in time. Just a quick word on autos as well, the already listed ones, not the new ones which will come. Mahindra and Mahindra, I think stocks done very well. Last 3-4 days I'm talking about. Friday was a big day. Monday was a pretty good rally. And by the way, the optimism is not coming from the passenger vehicle segment. It's coming from tractors. Escorts, for example, has had a decent run recently. Deepan, do you like anything here?
See, Prashant, the tractors operating profit margins in M&M are higher than the passenger vehicle and the utility vehicle. So if the tractor business starts to do well for them, then it could give a big leg up to M&M's profitability. And stock, of course, has run up in the last few months or so, years as well. The new models have been very well received and they have a dominant position in the tractor industry. So I would prefer to remain overweight on M&M as compared to a lot of other automobile companies where we are seeing that, sales are starting to stagnate and they're looking forward to the festival season to reduce the inventory which is there with the dealers.
Dipan, briefly when we spoke about IPOs, you mentioned about Bajaj Housing. As someone who didn't get it, they'll be quite depressed when they saw the stock go all the way to around 190. Now it's come to around 150. Get in or wait buy?
No, I think it's still expensive at 150 also. Maybe let's look at a couple of quarters or so. And once the price earning multiple is a little narrow, that may be a good entry point. I think at 150 also it is going at 80 times or something like that, if I'm not mistaken. So I just wait for reasonable valuations.
Okay. All right. Deepan, stay on. We'll come back to you and, get some more thoughts going. For the time being, I think we have to take a very quick break. Come back on the other side. We'll also have our technical experts join in, Mitesh Thakur and Sudarshan Sukhani, with some trading ideas for the day.
Welcome back. Hope you're having a good and a safe morning given the weather update that we have. Well, let's get in Mitesh as well as Sudarshan on the show. Good morning, gentlemen. Thanks a lot for joining in. Mitesh, yesterday we had a late surge coming in on the Nifty Bank. It had that technical factor because of the expiry-related factor that plays out. Today, the Nifty's turn. How do you approach trade?
So, overall, the market trend remains very bullish and there's no sign of a correction. So I think one good way to ride this momentum is keep trailing your stop losses, which is what something which you suggested. And currently on the Nifty 25,850, 830 zone, which is what I highlighted yesterday as well. And yesterday we got a low of 25,878. So I think that is the area and pullbacks around those levels should be used to add on to your long positions and keep a stop below this 25,800 levels. As long as we are not breaking that, I think the immediate move is on the upside. The longer term trend is also on the upside. In case you break 25,800, there could be a slightly deeper pullback, and then you would want to wait to buy on declines.
Okay. So buy on declines could be a strategy to go with. Got it, Mitesh. Darshan, good morning. What's the approach that you would take today?
Good morning. Let's assume that the markets open higher today. On that basis, take profits and step aside. We've had a very, very decent run. The US markets are now coiling. Essentially, they are going into a huddle, into a small consolidation. We never know which side this consolidation can break. Usually, I would have said it breaks on the upside, but we have done that 3 times in the last 10, 15 days. Gone into a huddle, gone into a consolidation, broken on the upside. So I don't think we should push our chances. If you see a rally, or even if you don't see a rally, I mean, if you get a rally, it's so much better. Exit all your long positions. Now the markets can still go up, and that means I'll be left, without a long position. That's fine with me. Today, I would close my positions and step aside.
Okay, all right. Got that. Gentlemen, good morning. Good to have both of you here. Sudarshan, what would your specific trades be?
See, the trades are all on the long side. And there are so many mid-cap stocks that are giving us those buy-on-dips opportunities. It's a cycle. This is cyclical. It keeps on happening now. This is a very good time. GAIL is a buy with a stop under 211. GNFC is a buy with a stop under 647. M&M Financial Services is a buying opportunity with a stop under 330. And finally, Tata Chemicals, which is also giving a sense that it's looking up now, is a buy with a stop under 1021. All of them are buy on dips. And they are in a dip.
Mitesh, what about you?
I have a mix of buy and sell calls. Prashant, good morning. Buy on Maruti with a stop at 12,600 for targets of 13,500. Buy on Power Grid. Disclaimer, I have some options positions over here on the positive side, so the view is biased. There's vested interest. So buy on Power Grid with a stop at 352 for targets of 385. On a mild decline, buy on Axis Bank around 1260, 1265 levels. Buy with a stop at 1244 for targets of 1295. And one sell call, that's Dabur. I think yesterday we saw some profit booking in FMCG names, and Dabur could possibly see more declines. So on a mild pullback, let's around 630. The stock is closed at about 627. So around 630, sell with a stop at 641 for targets below 610.
Okay, all right, gentlemen, got that. So thanks very much for all the calls. We'll come back to you a little closer to market opening. Need to take a break, and then we'll have the pre-opening rates with us. Let's see if they're indeed as buoyant as what the implied open was indicating. And Rahul Malani of Sharekhan by BNP Paribas will join in. We'll talk about the banking sector with a focus on some individual names. Back in a moment. Welcome back. 2 minutes to go before we start getting the pre-open rates, and about 16 till the actual market opening. Well, let's get you some F&O cues and some F&O trading ideas as well. We have Chandan Taparia joining in for exactly that. Chandan, good morning. So what are the calls you're going with now that the Nifty is above 26,000? Are you still long?
Good morning, Surbhi. Thanks for having me. So Nifty index has been making higher tops, higher bottom on weekly scale, and levels are gradually shifting higher. We have seen rollover of around 67%, and today is the last day of this expiry. And expiry on expiry basis, this index is up by around 3.35%. And this is the fourth consecutive positive expiry where longs are rolling and levels are shifting higher. We have seen comparatively in-line rollover cost with expectation of 75% rollover, which indicate that bullish bias could continue. We have seen built up of long positions, put writings are gradually shifting higher. Your volatility index is cooling, which also indicate that data internal indicates upside momentum. So till Nifty holds above 25,800 zone, overall bullish stance could continue for an upside target towards 26,250, and then positionally talking about 26,850 zone. That is our positional target as per the 164 gain square. Now looking at the Bank Nifty, yesterday we had a monthly expiry for Bank Nifty index, and this index has outperformed in this series. It closed with gains of around 5.76% on expiry basis. Rollovers were in line to 65%. And the good part is that index has been moving in a rising channel from last 2.5, 3 years, and now at upper band of the rising channel for a fresh leg of breakout. So if it manages to hold 53,750, the ongoing momentum could continue for an upside target towards 54,500, and fresh rally can be seen towards positional target of 55,555. So overall trend and setup are positive in both the indices until key levels are respected. We suggest and advise to hold the long position and use any small decline as a buying opportunity in indices. Now looking at the stock specific, first trading idea is buy on NTPC. We have positive view on most of the power name, and most of the power stocks have seen a power momentum on the last trading session. NTPC has been making higher top, higher bottom on the daily, weekly, and the monthly scale, and supports are gradually shifting higher. It has given a small consolidation breakout, and ongoing momentum can take it towards 452. So one can buy with support of 425. Second trading idea, that is buy on Oberoi Realty. After Fed's rate cut, now there will be focus on RBI policy meet, and because of that, most of the rate sensitive sector and stocks started to witness buying interest. Oberoi Realty has been making higher top, higher bottom, and most of the stocks from the same sector are doing well. So expecting further rally towards 2020, one can buy with support below 1895 level. Last trading idea, that is buy on escorts. We have positive view on the Nifty auto, and selective auto stocks can do well even after the recent run up. So here we recommend to buy on escorts. The stock has seen a fantastic rally in last 3 to 5 trading session, and follow up is clearly visible. Technically speaking, it has given a breakout from a classical pole and flag pattern on weekly scale, which indicates further rally and momentum in the counter. So one can buy with support of 4280, and this stock can extend the rally till 4580 to 4600 zone.
All right, Chandan, it's a pleasure having you with us here as always, and thank you for that analysis and those trades as well. Appreciate it. So that is the F&O side of things. Well, Sonal is here now with the day's momentumizer stock. Sonal, what's on your radar? Good morning.
Good morning, Prashant. The stock on my radar is Mahindra Life Spaces. Yesterday, the stock surged. It was up around 5%. Yes, the realty pack in general was doing really well. So this is one stock that came on my radar. The volumes were at 5 times of the average volumes the stock trades at as well. And if we look at the performance so far, it has actually underperformed the other real estate stocks and Nifty Realty as well. The stock is up around 6% year to date, while Nifty Realty surged 44%. So some up move is what we are seeing in the name in last couple of trading sessions. Yesterday's turnover on NSE was around 97 crore rupees. 5 days before that, the average was around 9.9 crores. So yesterday's volumes were 10 times the average value that we see in terms of trading on this particular stock. Stock was at the 50-day DMA of 575.48, and right now it's above the 20, 100 and 200-day moving average. So a lot of momentum that we are seeing in this name today.
Okay, all right, got that. Thanks very much, Sonal, for it. So we'll keep it on the radar. Let's get back to Deepan for a couple of questions as well. Deepan, let's talk about metals, and within that, let's talk about one stock, which is Vedanta. Nigel just told us that the company is going to be considering the 4th dividend so far this year, right? And I don't know, it's probably a good thing because the promoter is also, in need of that money, and they're doing more and more dividends. So as a minority shareholder, it doesn't hurt. But the bigger question is that there is a bit of a, uplift in general on the metals pack, considering what's going on in China. So would you buy metals, and within that, would you look at Vedanta or something else?
Deepan, before you answer that, I just want to make one more point. At the start of this year, if you bought Vedanta, you would get it around 270 rupees. All right, you got the stock at 270. Forget about the appreciation of the stock.
The dividend.
You've already got 35 bucks back of dividend. So effectively, you've got close to around 15% return via dividend itself. But it's not the one for the faint-hearted. You don't know what Mr. Agarwal wants to do next. It's the best placed stock, I would say, with regard to this commodity cycle post that QIP that they did. But Deepan, at 485 rupees, how much of the good news is in the price? I have a very split verdict out here. Some part of the sell side analysts say, though it's a touch me not stock. The other one says, it can't be a better play than this. Your take?
Yeah, well, I think that I'm also as confused what rating to give for Vedanta. But on one hand, definitely, I think the entire group is gradually going towards safety, and some of the concerns which are there about debt at the holding company level are getting allayed slowly. So that's a good trend. But I'm not a great fan of commodity stocks, as Nigel knows very well. And there could be a lot of cycles over here. Earnings volatility also takes place. So from that point of view, I don't think it is really at that attractive valuation at that typical 8-9 times PE multiple, where you can buy with limited downside and great deal of margin of safety. And look, the world is getting into very complex space where you have interest rate cuts because the economy is slowing down in some parts of the world, and then China is stimulating. And which way, at the end of the day, the commodity prices move is very difficult to say. So just best to stay away from commodities, in my opinion. That strategy has worked well. There are so many other ideas one can pursue. So I would just prefer to wait and watch as far as commodity stocks are concerned.
Okay, all right, got it. So wait and watch on some of the commodity names like Vedanta. Got it, Deepan. Let's move on to banks. Of course, one of the talking points today is the fact that we'll watch out for how yields react to the second half borrowing calendar as it gets announced. Remember, the government announced a gross borrowing of about 14.1 lakh crores, out of which more than half is believed to be done by the end of September, and we'll know what the plan is for the second half today. Anyway, bond yields have been moving down in a pretty dramatic fashion. Yesterday, the 10-year yield was down to about a 32-month low. We're looking at levels of about 6.75 now in anticipation of more foreign flows coming into the market, as well as, of course, eventually the RBI also getting on the rate cut bandwagon. So in this environment, how do you look at financials and banks? Rahul Malani, DVP Fundamental Research at Sharekhan by BNP Paribas is with us. Rahul, good to have you on. So let's start with that overarching question. We are probably entering a rate cut cycle. A, do you believe that? And if yes, then what's the best way to play it?
So good morning, Sudhi. So currently on the banking outlook, we believe that there is no earnings upgrade at least in the next 6 to 12 months. But rather than there is a earnings downgrade risk, marginal earning downgrade rate led by moderation in growth and a normalization of trade cycle as most of the asset quality, best of the asset quality is behind us. And margins will still be under pressure due to the elevated retail cost deposits, although wholesale deposits rates have come down. And we are factoring in about 25 basis points rate cut in December 2024 by RBI. So, and over a period of we are factoring around 75 to 100 basis points over this cycle. So basically, margins would definitely come down for banks, but over the cycle it will be passed on. So near term, there are no earnings upgrade trigger for the banks, but rather than there are certain marginal risks to the earnings estimates currently now.
Okay. So let's talk about the larger banks first, because here also there's a fair amount of confusion. On one hand, I mean, there's a view that the best of the credit quality is behind us and credit costs will start rising from here on. But we're in a downward rate cycle. So what's the call on large banks, and which are the ones that you like the most?
So among the large banks, HDFC Bank continue to be in the course of balance sheet correction, and it will be a gradual shape and it will take time. So among the large and while the one side Kotak Bank is involved in the improvement in its internal control systems and digital platforms. While we continue to prefer ICICI Bank because we believe that it is relatively well positioned among the large private banks as versus if you compare the growth versus the liquidity plus the deposit growth plus the asset qualities and the additional buffers on the balance sheet, we continue to believe that it is a sustainable story for at least over the medium term. For example, in the range, it will continue to deliver 15 to 16% growth irrespective of the sector industry growth. While because it has been continuously, if you look at the deposit growth, it has continuously maintained the deposit growth in line with the loan growth, and which gives us a better visibility compared to the other peers.
Okay, all right. Hi, good morning and good to see you. What about the PSU segment? You know, that was the sector that re-rated big time. PSU banks in particular, SBI, PNB. What's your view on these PSU banks now? Because many believe that bulk of the re-rating is done. Bulk of the good news is in the price. Would you concur?
So our view is that the outlook is still better and will continue to deliver at least 16 to 17% ROE at least in the next 1 to 2 years, despite some moderation. But they will still able to report ROE in the range of around 1% range.
Okay. All right. Okay. All right. Thanks a lot, Rahul, for joining in and giving us your view. Bit of a technical snag out there. But we have, 5-star, that large trade. I think bulk of that did take place in the last few minutes. So I think we should get that stock up for you. I think it's opened up with a gain of close to around 0.5%. And if I'm not mistaken, I think Crow shares have got changed out there. It's up close to around 5% or thereabouts. So let's see whether or not it sustains. But it's almost 9:10. Let's get Mitesh back in. Hi, Mitesh. Welcome back. Tell us, what's your call at 9:10?
Yeah, I'll go with a buy on Maruti for targets of 13,500.
Got it. All right. Well, I think let's get Sudarshan's view as well. Sudarshan, what's your call?
Consider buying GAIL with a stop under 211.
Okay, GAIL is the call that you'll go with. Got it. Thank you very much, Sudarshan and Mitesh. We'll watch out for these stocks today. Let's go across to Nimesh now and see what's the standout brokerage report of the morning. Nimesh, good morning. What are you looking at?
Hi, sir. There is an interesting report on auto ancillaries from BofA Securities. They've made some changes to the few stocks. So today they've upgraded Sona Comstar to buy from underperform. So technically a double upgrade. And they've raised their target price on Sona Comstar to 845 versus 670 earlier. They've also reiterated their buy on Samudra Motherson. And there they've raised the target price to 240 now. And they've downgraded the Bharat Forge a notch to neutral from buy, and they have a target price of 1,800, which suggests a potential upside for Bharat Forge as well. Now, as far as for the sector is concerned, they believe that the auto ancillary companies offer a solid structural earnings growth with new avenues opening up, including the electricity and premiumization, which will lead to improvement margins as well. And most importantly, there is an export opportunity which is opening up for all the Indian companies. So that's a big reason for the big upgrade. They also see a big inorganic opportunity, especially in Europe, which is opening up for a lot of the Indian companies. So that inorganic deals could be something to track for all the Indian OEMs. And additionally, most of the OEMs are now consciously focusing on reducing the cyclicality by foraying into the non-auto segment. So a big report on auto ancillaries in terms of stock specific. Sona Comstar has been upgraded to buy now, with a target price of 845, and they have reiterated their buy on some of the Motherson as well.
Interesting note, Nimesh. Thanks a lot for joining in and giving us all of those details. Well, I'm keeping an eye out on the one that's not for the faint-hearted. That's Vedanta. They've already given 3 dividends. They're saying they want to give 1 more. So they're going to consider the 4th interim dividend for the year in October itself, and October 8th is the date. Now, so far, they've already given a cumulative dividend of close to around 35 rupees or thereabouts. Who gains the most? The promoter entity. They have 56% stake in the company as of the last disclosed shareholding pattern in July 2024. And you'll be wondering, why are they giving out such big dividend when they also have big capex plans? Well, Vedanta Resources' primarily source of income is from Vedanta Limited. So they get it via brand fees, via dividend payouts as well. And in case they sell some stake, then that's as well another income for them. And Vedanta Resources is in far better shape. But this dividend that they get from Vedanta Limited, it helps them service their debt, and it helps them take care of any kind of obligations as well. So the payout, in fact, helps re-rate the Vedanta Resources, which is the parent company. So positive reading out there, though the stock has seen a bit of a run in the last few sessions.
All right. I think, we'll see how this one goes, but lots of interest and lots of opinion and debate on both sides of the spectrum here as far as Vedanta is concerned. I think, we're going to look at market open levels come up in just a bit. It's look at the change in the pre-open, 1 point and 2 points. So it's going to be a quiet start, no doubt. And we'll pick up from there. So 26,000 round there. without too much happening, at least in the first, as far as the first look goes. Stock-wise, I'm sure it's going to be a lot more, some more movement and not just what we're seeing out there on the indices. So first rates anytime now. And by the way, all these blocks which have happened, which are happening, I mean, I think all those stocks are also in focus, and 5-star, for example, and a few others as well. Vedanta, as Nigel mentioned, we continue to keep an eye on the power names. We've got a discussion lined up a little later here on the show as well. So lots to track. What do we have? First rates coming up. It is nothing. It's a flat start, as flat as I can remember, at least in the recent past. Nothing. Bank Nifty's got nothing. The Nifty's got nothing. The sensex got nothing. And the mid-cap index got something, 0.1%. Not even that now. So it's quite out there. What do we have as far as the sectors are concerned? Early, but the big pain point has been the IT services index that is starting about 0.25% higher. So 42,024 as far as the Nifty IT index is concerned. Market breadth out of the gate seems to be positive in the ratio of about 2:1. 20 stocks are lower. The heat map on your screen, 20 lower, and about 30 stocks are starting up in the green. So that's the first look at market open. Surabhi.
Okay, extremely quiet. Let's look at what's moving on the Nifty 50. Maruti Suzuki is the leader right now, 1% gain, followed by SBI Life. Then comes in Shriram Finance. And then you have a few tech names that have been sulking in the last couple of sessions. They're finding some green today. So Infosys would be one of those stocks. Tech Mahindra, LTI Mindtree, a little bit of a little shade of green on some of these names. There's a Nestle, Tata Consumer, about 0.5% up on these stocks as well. Bajaj Auto and Tata Motors. So basically the early trends are auto seems to be fine because you've got three names, Maruti, Bajaj Auto, as well as Tata Motors on the upside. And then you have a little bit of buying on IT. On the flip side of the screen are the banks. Axis Bank, ICICI Bank, weak trends to begin with. HDFC Bank is also absolutely at the flat line. So depending on which way these stocks start moving, we'll have more clarity on the market direction. Hero Moto is not participating in the other auto move. It's actually down about 2% as we speak. ONGC is also a bit of a weak link today. Let's see what the metal stocks are because they've had a good couple of days. Tata Steel is down about 0.5% as we speak. JSW is also on the lower side, as is Hindalco. So a bit of a cool-off in the metals universe. Very, very quiet.
Well, that's right. Let's focus on a few more names than Trent. They like what Citi has to say. They have initiated with a buy rating. They have a target price of 9,250. They're talking about a potential 21% upside, and that's why they've included Trent in the Pan-Asia High Conviction Focus list. So that's the reason why, in fact, that stock is higher. It's up closer around 3% or thereabouts. On the flip side, you have Manappuram. That's a little bit under pressure. We understand that in money control exclusive states that Manappuram's MFI arm, that's Ashirwad Microfinance, has deferred listing plans. So we'll require some clarity on that front, but that stock is a little bit lower. Crompton, the stock is down close to around 3% as we speak. So that's the one that's taking a bit of a knock on the downside. What else is doing well? IDFC, that's higher in today's trading session. So that one has popped up in trade. I think I saw Reliance Infra took a bit of a breather. The stock was down 2.5%, but that stock has been getting bought on dips. So let's see whether or not it bounces up. But that's already rallied from around 230 to 330, all of this in a matter of a month or so. So just keep that in mind. For the time being, it's recovered from the low point of the day. Reliance Power continues circuit to circuit up close to around 5%. Easy trip after the dropping that we saw. It's bounced back a little bit. And IEX, Investec is positive on the stock, but it's struggling to even move into the green. Stock has corrected more than 15% in the last 3 sessions.
Well, I think, it's got a bit more action as far as indices go as well. We've got the market, which is at about 26,027, slightly above yesterday's high, about 10 points above yesterday's high. What do we have with regards to what else is going on? So Trent is the second biggest volume-led gainer with a 3% gain. And I think that Citi note is sort of showing up with some impact. Prestige Estates is another one which is up 2%. 1880 or so on Prestige Estates. It's got large volumes on it. Signature Global is another one, right? I mean, real estate name out of Gurgaon, 3% higher. 1630 on Signature. and volumes as well. Rainbow Hospitals, 5.5% up, 1460 on it, and it's got decent-sized volumes. So that's another one. Mukta Arts, it's got volumes, and we don't ever sort of, it never shows up with volumes like this, but 15% gain on this one. Look at almost 1 million shares now on Mukta Arts. Zaggle is up 2.5%. We'll be speaking with the management a little later. 441 on Zaggle. Stock's done very well recently. Uno Minda is up 1%. Triveni Turbines, Skipper Limited, etc. I mean, these are basically what's coming up with, right after market open. Look at Policy Bazaar. Policy Bazaar has lost 10% in the last 2 days. It's down another 3%. We reported from sources that they're looking at entering the healthcare segment. Hospital, 1675, about 3% down. We've got Saregama, which is down 3%. Crompton is down about 3%. NMDC is down 1.5%. There is, of course, Hero, which is the biggest loser with a 1.5% cut. So this is just the first couple of minutes as far as market open is concerned. Rana Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good to have you with us here. Thanks very much for your time. Rana, the more and more, slowly but steadily, the drumbeat continues that, reallocate your portfolios, tilt your portfolios, and, do two things. One, get into names where you're really convinced. And, of course, generally be convinced more in the large cap space than in some of the smaller names. That's the general view from the institutional community that we speak with, Rana. Do you share that view as well?
Good morning. Yes, I think that's a pretty relevant point because the market has been, melting up because of the flows and lack of, let's say, good quality paper supply from the corporates. So I think to put this in context, let's look at the return numbers because valuation numbers we have discussed often. I think the Nifty in last 2 years has given returns of 20% plus CAGR. That of the mid cap is 40%. Now compare this with the long-term returns. Nifty's long-term returns is about 13%, and that of mid-cap is 19%. So first point is that the Nifty and NSE mid-cap are somewhat, they're giving higher returns than their average. Some of it is justified because the macro is improved, corporate profitability is improved, but may not be all of it. And then secondly, you can see the mid-cap over a long period of time has given 1.5x, but now they're running at 2x. So that is because of PE expansion. So could there be some consolidation expected? I think, yes, that's pretty much possible. Now, taking a step back, if you look at the market action, and we tend to look at only last 3-4 months. But if you look at even this year, January to June, the market was in a very tight 5% range. So can we go again into that kind of consolidation range at 5% for next 3 or 6 months? That's pretty much possible.
Okay, all right. So, Rana, hi, morning, great to have you on. Just a sense, if the market, first of all, do you see any immediate downside risks? Any reason to believe that one should be taking some profit off? And if not, then I think then one moves to the question of then how do you add incremental money to the market?
Right. I think the downside, downside risk, right? One reason why one could potentially argue for downside risk is to say that downside could come from the earnings not meeting expectations and valuation too high, so on and so forth. But we think although the micro looks a little soft, earnings will not disappoint by a big margin. Now coming to the flows and the PEs, the valuation, it will not correct on its own. The risk that I see and the valuation very good could correct if the supply of papers overwhelm the demand for equities. And as we understand for the month of October, November, quite a few large IPOs are planned. And we'll have to wait and see how the responses are those two IPOs. If, let's say some of them do not give the expected returns, I think that could cause, that could lead to some soaring of sentiment and therefore some correction in the PE ratios. So that is one risk. Definitely the supply and the valuation of the supply that we're looking out for. Secondly, I would also like to highlight that from here till about February, there are quite a few state elections. Now, we are fully aware state elections do not alter the equation in the central government. Nonetheless, there could be a sentiment impact if the state election outcome were to be adverse to market expectations.
All right. Hi, Rana. Good morning and good to see you. And since you briefly spoke about these IPOs, two IPOs that listed in the stocks ran away was Ola as well as Bajaj Housing from very different sectors. But the stocks ran away, and actually from the peak, they've corrected a fair bit. What's your view on a couple of these names? Some of them have big potential going ahead, but they seem to have run ahead of themselves.
So without getting to any company specific, I would say that the IPOs that have come, they are either from very good corporate houses or in a segment which is not very large in Indian markets, not very large float available. Now, investors want to either own a very good corporate issuing paper or they want to also own these new emerging areas. Now, the thing is that the supply of issuers papers is so low and everyone wants to own. It is the pure demand supply that is taking the price up. I think if you look at any valuation parameters, these would appear to be factoring in like probably FY27, FY28. So that's happened due to the supply of the supply of papers, but the demand being much higher than that.
Okay. The other sector that sort of we're looking at obviously is, on the whole manufacturing side, the big debate has been whether the best of it from a market perspective, from a stock appreciation perspective, whether that's behind us or whether all dips should be bought. So when you talk about a large theme like manufacturing, if you could break that down more in a more granular basis, what's your overall thought? And then if you were to invest, again, fresh capital, then what part of it would you be looking at?
No, sure. I think that's a great question. And we have been highlighting, I think, since about April, May, that manufacturing as by and large a big theme is kind of peaking out. Now let's get to a more nuanced approach. Let's break down manufacturing into broadly two parts. One, which is impacted by government spend and policy, both. So this will be typically a railway, defense, power segment. These stocks over the last 2 to 3 years have seen tremendous amount of rally, and the valuation there looked very expensive. Now, by definition, all these companies are now factoring in very good execution, but on the ground, that may not be the case. I think these companies will continue to do well as corporates, but the stock price just gone way too high, not to justify these kind of multiples. Then come to the other side, which is a policy driven. Now, Indian government has taken several policy in the areas of electronics manufacturing, in terms of, let's say, energy independence, so on and so forth. We see some opportunity there, although I think mostly in the electronics manufacturing, because that's a very large addressable market in India as well as globally. You might have seen that one of the world's largest phone maker is increasing their sourcing from India. So there could be plays around that value chain. So that is something that we like. In the industrial goods area, some of the global companies are increasing their sourcing from India. That is something we like. But I think going to even the energy value chain, I think there also, the stocks, because of, again, lack of quality supply available, has run quite a bit ahead of their fair valuation.
If you can quickly pull up the Policy Bazaar stock, I just want to make a quick mention of it. Volumes now are humongous. It's the number one volume-led loser right now on the NSE. And take a look at the cut that's coming through. It's down 5%. Actually, we should put an alert with our story. So that's basically what 16% down in 3 days flat. 1634. Rana, I don't want you to comment on Policy Bazaar per se, but the news story is that they are looking at getting into hospitals. This is what we put out yesterday. As an investor, how do you look at it? I mean, largely a platform company now getting into the healthcare space. And anything you say is not to be construed as investment advice. So go on. Feel free.
Right. I think, again, without specific reference to any platform, I think healthcare as a space, we are quite optimistic. We see large opportunities. Because if you look at the large hospitals, right, where also the stocks are done very well, their ARPOB are like 70,000 rupees, which is considered quite high for, let's say, if you were to consider the income of majority of Indians. So there exists a large opportunity to provide affordable healthcare and with affordable insurance coverage. So I think there's a large, again, untapped opportunity there, but that's out there. How to capture it, what kind of plans one would make, and what kind of capex it will require. That I think someone needs to do much real work on. I would also have to highlight one thing. Ultimately, as stock investors, we make money on the profits, not on the TAM expansion. On that, we make money on corporates capturing that in profit in the profit after tax and delivering good return ratios, and that will come through execution. But top down is the space of affordable healthcare, affordable insurance. That space as such is quite exciting.
Okay. All right. Rana, we'll leave it on that note for today. Thank you very much for joining in and giving us some perspective on the market. The market, by the way, I mean, it's such a quiet start, but it's now trying to build a little bit, 45 points up on the Nifty. You've got some red on the mid-cap screen, so let's see how that goes along. Still about a 180-point dip on the mid-cap index. So a bit of a diverging trend. It looks like there's some interest in large caps and profit-taking continuing on the mid-cap side. Let's move on now to the big story that came through yesterday. The Ministry of Power has finalized the National Electricity Plan for 2023 to 2032. The total cost of the plan over this entire period is going to be 9.15 lakh crore rupees. That's the kind of investment we're talking about. The National Electricity Plan aims to meet peak demand of 458 gigawatts by 2032. One of its key targets is to facilitate renewable energy integration as well as green hydrogen loads into the grid. To talk about this development, we have with us Mr. Anil Gupta, CMD of KEI, and we also have Amit Oplenchwar, the director at Kalpatru Projects. Thank you, gentlemen, so much for joining in. So we've got the big headlines in yesterday with the big targets going all the way up to 2032. Let's get your opening thoughts on what you think about this plan and whether the targets are achievable and the investment that is being spoken about. Mr. Gupta, you go first. What did you make of some of the bigger headlines that are in of the plan as of now?
Yeah, thank you for inviting me to the show. This is a very ambitious plan. Basically, as the power generation is increasing, by the renewable power or, with this coming up of this pump storage projects, new thermal capacity generations and green hydrogen, which is talked about. So it is very important to, undertake increase in the transmission capacity to evacuate that power and bring it to the grid and then subsequently to the distribution network so that the consumer is able to use it. So the plan is to expand this network, this circuit kilometer, by almost 50 to 60%, and the transformation capacity of the substations also by 70 to 75%. It is a big opportunity because we have to, feed the demand of power to data centers, to a lot of artificial intelligence networks, growing demand in the urban and rural areas and industries. So unless the power transmission is jacked up, it will not reach to the targeted consumers. And it will bring a huge opportunity to EPC companies, to electrical cable companies, the transformer manufacturers, and many other companies who are supplying this to this sector.
So absolutely. And, I think this is becoming more and more clear that if we have to feed power to all these data centers and, what we're talking about on the renewable side, you've got to be investing in the grid. And I think that's what the plan really focuses on as well. So just quantify the opportunity if you can. I know it's early days, but for KEI, for instance, what could this mean in terms of revenue potential? Not this year, but let's talk about let's say a 3-year plan.
Only from this, I think the opportunity is around 50 to 60% more sales from the cables in this sector. But it will have a compounding effect because the power, from these transmission lines will be delivered to the distribution companies, to household sectors, to real estate, to industries. So it will have a compounding effect by around 2.5 to 3 times compared to what it has a direct impact. So I think it will, I think, triple the requirement of products used in the power systems through transmission of this type of power.
Got that. And that's well put. Gentlemen, good morning. Great to have both of you here. Prashant this side. Mr. Gupta, if I can request you to don, they say that businessmen often make the best analysts. So I'm not asking you what the benefit for KEI will be. If you can just step back, and when you say this is transmission capex, right? It'll require sort of cables, wires, etc., as you said, and companies like you will benefit. But what else you think in the value chain in transmission capex? What are we looking at? If you could just give us a bird's eye picture, and what kind of companies will benefit?
Prashant, it will benefit all the EPC companies in this sector. It will benefit the conductor manufacturing, ACSR conductor manufacturing companies. It will benefit the transformer manufacturing companies and all the companies like ABB, Siemens, or the companies who are supplying, products to the power sector, power transmission, generation, and distribution sector. Because once the power is there, it has to be used. It has to be used by by the distribution company, and then it has to be used by the actual user. So in complete value chain, whatever products are, I can say that panel manufacturers in HT segments, LT segments, or whatever products are used in this particular sector, specifically, it will benefit a lot to the EPC companies because they will get the contracts and then they will buy the products.
Actually, on that note, let's bring in Amit as well. Amit, exact same question to you. You're right in the thick of the action as all these numbers and targets are being discussed. What's the opportunity? If you could put some numbers to it.
So, Subhi, thanks for having us. I think, first of all, to put context to this plan, I think it's amazing. It's very futuristic. It's very progressive. And I'll tell you for three reasons. One thing is to add capacity to meet future demand, right? Today, our per capita consumption in India is literally at 1255 kilowatt hour as of 2022. US is 9 times that. China is 4.5 times that. So for the next 10 years that this plan rolls out the targets that you all have in front of you, I think for everybody in the value chain, and especially for large EPC companies which have technological difference in terms of capability, I think it's a runway of 10 years where there's going to be unabated work. I think, but more importantly, the reason why this grid is very progressive is because if you've noticed, they've spoken about 4 very, very important things. Other than adding capacity, what is more important as the goal is to ensure reliability and sustainability of the grid, right? Today, we are also talking about 3 areas. One is ISTS that you would have read, making sure that power is wheeled across all states so that we have uniform distribution of power. It doesn't matter where it's getting generated or where it's getting consumed, right? It gets into a very stable pan-India grid. Second, it is going towards HVDC technology, right? We've only done 33 megawatts of gigawatts of HVDC so far till now, right? Year to date. And I think in the next 10 years, we've got to add exactly the same amount of HVDC networks. Now, HVDC is, as you know, it's high voltage, it's direct current. It reduces the transmission loss over large distances when electricity is carried. So I think our grid becomes more stable, it becomes more efficient, it becomes more reliable. And all of these things in this plan are very, very progressive. If you look at also OSOWOG, I don't know if you paid attention to that. It's between Maldives, UAE, Saudi, and Singapore. We are also talking about one grid where there's one sun and one grid. Now, all of these places, we are present, for instance, and our cost of generation in India is much lower compared to these countries. And there can be a transfer over a period of time also if this plan gets implemented. So to answer your question, I don't have exact numbers, but if you look at all the capacity targets, whether it is for pump hydro, whether it is for renewable, whether it is for transmission capex, substation, they are very, very large numbers. And we being one of the top 2-3 players, I think for KPIL, it holds really good that for next 10 years, we have a, absolutely a clear runway. We are more concerned about how do we enhance our management bandwidth and capability to execute all these orders over the next 10 years, right? We've had a lull over the last 4-5 years, and now suddenly there's an explosion in terms of amount of work that's coming. We've already, established our design centers for HVDC and other networks in Baroda, in Mumbai, in Noida, in Brazil, and in Sweden. And I think they're constantly focusing on how to use AI, drones, helicopters, etc., to use in our execution capability, and hence becoming, faster, more reliable than we are even today by using technology in our execution. So work doesn't seem to be a problem.
No, I get that. I think you've given us, you've given us a great backdrop, and it's a good position to be in, right? You're saying next 10 years, you will be a very, very busy person along with everybody else in the company. But just help us understand. But just help us understand, I mean, as a company, given the extent of the opportunity, will you be present in all parts of the value chain when we're talking about, upping the ante on transmission infrastructure and grid connectivity? I'm just trying to get more granular details on how you will pivot or how you will capture the opportunity in what segments. And again, the same question, not a roadmap for today, but if we talk about the next 2 to 3 years, compared to the targets that you had you already factored in this kind of a network and grid expansion? We're just trying to understand if the announcements yesterday mean a much bigger business opportunity.
So let's look at us in the next 2 to 3 years, right? In the value chain, you start with manufacturing and then you go on to execution. As you know, today we manufacture transmission line towers. We are one of the largest manufacturers of transmission line towers. But because of this roadmap, there is pump storage hydro, there is hydrogen plants that are being talked about, as a result of which it gives me an opportunity to expand my current manufacturing portfolio immediately to look at hydrogen electrolyzers and other parts of the value chain in transmission and substation. Second, so far as my other businesses are concerned, we have a very large water division, and once pump hydro storage kicks in, it helps my water division to get business, which is a completely new segment that opens for us. We already have the capability to do those. There are large hydropower plants being talked about. We have a very large heavy civil division, and that is a new opportunity set altogether, which we've not done before for our heavy civil division. So it's, across the value chain from manufacturing to water business to heavy civil and, of course, transmission and substation. I think for the next 10 years, it opens a huge runway for us.
This is interesting. You just mentioned a couple of new verticals as well, hydrogen electrolyzers, heavy civil work, along with everything else that you already do. Very quickly, gentlemen, because we have, I think, less than a minute left on the conversation. So, Amit, you'll have to start thinking about money and putting more capex to work as well, right? Because you're talking about a bigger opportunity here. Maybe some sense, again, I'm trying to get back to some definitive numbers, capex this year, and now with this kind of a backdrop, what is the increase in capex that you would look at?
So, Surbhi, we've already said we're going to do around 450-500 crores of capex this year. But the good thing about transmission networks is that it's not a very capex intensive business. What you need is engineering capability, which we already have. The incremental capex is not as heavy as some of the other sectors, like heavy civil, etc. So in that sense, I won't be able to give you an exact number, but I don't see capex being a problem for us given the strength of our balance sheet to...
No, because you mentioned newer, Amit, because you mentioned newer businesses like getting into electrolyzers, like heavy civil. That's why I'm saying, I'm trying to understand the company pivot.
Honest, we don't have plans yet because we still have to see what technology works best, etc. So I will be able to tell you that as we firm up the plans going forward.
Okay. And Mr. Gupta, very quickly, same question to you from a company perspective, additional investments or a revenue number, any number that you can leave us with, perhaps.
You see, we have already undertaken a very heavy capex in our new greenfield project coming up at Sanand near Ahmedabad. It is a capex of almost 1,800 crore rupees, which will be done in this and next financial year. And it will have a compounding effect of our turnover. We will be able to increase our sales by almost 5,000 crore per year from that project. And we intend to grow by 17 to 18%. Secondly, we are going to bring large HVDC extra high voltage cables in that plant up to 525 kV. So in this yesterday's announcement, a lot of HVDC new lines are going to come up, and I think many of them may be through the HVDC cable, not through the overhead lines alone. So this is going to benefit us like anything in terms of enhanced use of extra high voltage power cables in HVAC as well as HVDC.
Okay, all right, gentlemen, great conversation. Thank you very much. This is pretty futuristic stuff, and we hope to get more granular details as the plan rolls along as well. And good luck to both of you in terms of making the most of it. Thank you for joining in today. Well, that's sort of a curtain raiser on what to expect from some of these power companies on the transmission side as the National Electricity Plan rolls along. We'll take a break. On the other side, Avinash Gokhandi of Zaggle Prepaid Ocean Services will join in to talk about their new acquisition of Span Across IT Solutions as well as mobile wear tech. More details coming up.
Welcome back. Well, let's focus on Zaggle Prepaid. Well, that's the next management on the show. The stock has surged, has more than doubled actually in this calendar year itself. The company has announced stake in two firms. They've acquired stake. They bought 98% stake in Span Across IT Solutions for around 32 crores. And they've also invested around 16 crores for around 26% ownership in mobile wear technologies. To discuss this and more, we have Avinash Gokhandi, the co-promoter, MD and CEO of the company. Hi, Avinash. Good morning. And interesting aggression is what you're showing. Some inorganic growth. Let's talk about the first one then. Span, you're going to be paying around 32 crores, but the revenue that's last reported is less than 5 crores. So what's, justify these valuations for us? It's a little bit baffling, but clearly you believe there's big growth potential and there's a big scope out here. So from this 5 crores, what is the potential of this company, and give us the rationale?
Good morning, and thank you so much for having me. I like the term that you used, aggression. We would like to look at it more as, our belief in what we are building. So look, we'd already acquired 45% stake in Span Across. The brand name is Tax Spanner. And the thesis is very simple. The whole ecosystem has evolved in the last decade or so. Tax filing has gone up. There are more and more individuals and companies filing, whether it's their income tax, whether it's their GST. And we are seeing this complexity increase because the way people's salaries are getting augmented with rental income, with investments, with other sources of income, filing taxes for millennials has become increasingly more complex, and they need support. Span Across does a great job on that. We've seen them being able to service companies like HCL, like Accenture. They have a whole host of these contracts that come to us as well, and that's extremely valuable to us. The other, of course, factor is the GST filing, right? And GST filing for mid-sized companies, smaller companies. We have a whole host of channel partners, vendors who need support in being able to do this well. And Tax Spanner brings that capability. So we've seen tremendous traction in the partnership in the last 6 months, and that's why we've gone ahead and made the acquisition.
Ash, business-wise, not questioning you. There is definitely a good rationale that you've gone ahead and bought this, and you're paying 32 crores. My question to you, and from the stock market perspective, they have appreciated this move. The stock price is up more than 4-5%.
Right.
But how do you see the revenue scaling up of this acquired business? From 5 crores, where is it headed?
Well, we don't look at it from a standalone basis because the synergies are superb, right? The synergies are on both levels. One, this business itself benefits from our large base of corporate customers. We have more than 3,100 corporate customers. We have more than 2.9 million users. They are able to offer tax filing capabilities to all these companies and users. We also have a very large base of channel partners who are dealers, distributors, retailers for a variety of companies and vendors of a variety of companies. They are capable of serving this audience as well, and that number is running into lakhs, and that's where we believe that revenues for the tax planner business would grow, revenues for the Zaggle Save business would grow because we are getting more stickiness from our corporate customers.
Avinash, hi, morning. Prashant here. Good to speak with you again after a while.
Yes, Prashant.
So my question was, so is this a service you throw in? I mean, is this because we've got lots of these companies, right, who you can file your tax return for, as low as I think $500, maybe lower. Lots of these. So this will be like an add-on or sweetener to that you throw in to your existing relationships, or this is really valuable that you can make money of it. If you can give us a sense.
Prashant, it's really valuable because you can make money on this. It's also an add-on, right? And today, if you look at corporate customers want a holistic, comprehensive solution. They want capabilities for their employees where they're taken care of end to end, right? So we already are a market leader in the employee benefits segment, and this becomes a great addition to that capability. From a corporate perspective, also today, a lot of companies, we may not necessarily acquire all users in a company, all employees in a company, because all employees may not be incurring expenses or claiming reimbursements from the company, right? But everybody needs to file taxes.
So what's the TAM for this from your universe? Forget about selling this to new customers, but in your existing universe,
yes.
Just some idea. Obviously, you've done internally. You've discussed this. What's the TAM? How many people? And would you charge per filing? I mean, would it be something like that? Yeah, go on.
So So it would be a part of our bundle in terms of our SaaS revenue, Prashant, right? So we'll be able to increase our SaaS fees per corporate. The number of corporates that we think would be interested in this sort of a service would run into thousands, right? Because every company has employees who have these challenges. We also sit with a very large base of, as I said, SMEs who are channel partners or who are vendors. So we have more than 500,000 of those who are active on our platform. And that's a large base to whom you can offer both, IT services, IT filing services, advanced tax, your GST. So that's another big opportunity that we see that we'll be looking to tap into.
Avinash, hi. When one looks at a lot of the broker notes and the research around Zaggle, one thing that was constantly popping up is the expectations from your vertical called Zoyer, which is where I think you target the mid-segment, the mid-market clients, right? And now you just spoke about, this latest acquisition. So I have a slightly bigger picture question for you. Tell us, if we break up the company, there is obviously the employee benefits business, there is Zoyer, there is Forex cards. So just tell us, I mean, in terms of the revenue breakup, how will the individual key verticals grow over the next 1 year or so? And all the optimism around Zoyer actually leading that growth, and I think you're talking about growing in international markets, etc. Is all that optimism well placed?
So thank you for that, Subhi. It's very well placed in our view. We've seen tremendous traction in Zoyer. 40% of our spends are now Zoyer, right? Last year, if you look at our program, last quarter, if you look at our program fees of about 126 crores, 55 crores came from Zoyer, right? So Zoyer has really taken off, and Zoyer was zero on 31st March 2023. So there's obviously, and if you think of it logically, right, everybody needs vendor payments, everybody has vendors, everybody files for GST. You have petty cash use cases for NBFCs, AMCs, brokerage houses, retail chains, very large retail chains, small retail chains. Everybody has petty cash challenges, right? So these are use cases which are very, very ubiquitous. You also have the standard use cases around SaaS spends, marketing spends, like Facebook, Google, AWS payouts. So you look at all the places where people are spending, people as in companies, and they want a better handle of how to optimize on that. They want to be able to have evidences of those spends, that those are bona fide spends, and they want to have limits and policies on what basis these spends would be authorized or allowed, and married to a payment instrument which is going to be able to allow you a seamless recon, which is what we offer here.
So, okay, just to go back to the numbers to round things up, the last guidance given by the company for this year's growth was, I think, 45 to 55%, with an aim to hit EBITDA margins of about 10%. Are you on track with that? Or is, say, Zoyer growing and some of the other acquisitions that you're doing, is all of that, coming together in such a way that you would be exceeding the guidance on revenue or margin?
Yeah, so we are absolutely on track for that. And in fact, in the last analyst call also, we had said that depending on how our numbers shape up at the end of Q2, we may up the guidance. And, Q2 seems to be shaping up really well. All the growth that we're talking of should be 45 to 55% is organic. This is not coming in from the acquisitions. Those would be like icing on the cake. And that's how we are looking at it. All the revenue that we're talking of is essentially from Save, Propel, Zoyer, all the existing businesses that we have. Right?
And within those existing businesses, if you could rank them in order of growth, what should we expect? Save, Propel, Zoyer, what would be the order?
Zoyer, Save, Propel, right? That's the order. Zoyer being, the larger, market potential because everybody has vendors. Vendor payouts are also larger. And followed by Save, employee expenses is really taken off. Just today, I saw in Economic Times a large article about how business travel is doubling. So business travel is very, closely linked to, expense management. As business travel grows, your expense management capability has to mature because, everybody is traveling. How are you going to be able to make sure that those are, according to the company policy? There's no leakage, there's no fraud. How do you make it easy for people to file their expenses? There's so many nuances and factors here.
And 10% margin this year, EBITDA margin?
EBITDA margin is our guidance. We are staying, consistent with that. We'll be around 10%, and that's what we are aiming for.
Right. Top line growth of what would 45 to 50%? That's the range, right? What you've said.
45 to 55, which we may increase, Prashant, after Q2 numbers.
Okay. All right. That's interesting. You don't want to say by how much, right?
Well, too early, but we're the numbers are looking good. Let me put it this way, really good.
Okay, numbers are looking really good. The stock's also looking really good. On margins, what I have is adjusted margins are between 11 and 13% for the full year. Is that...
So that was last year, Prashant. This year guidance is about 10%. And because we're capturing market share, that's what we're going to stick to right now.
Okay. All right. Thank you very much for joining us, Avinash, and good luck as you continue to execute. The market likes what you're saying. Stocks up 6% at this point in time. Now, two big IPOs are set to hit the street as market regulator. SEBI has cleared food delivery and quick commerce player Swiggy's confidential IPO filing. The Korean automaker Hyundai's $3 billion issue could also be India's biggest ever. Let's talk about this and, of course, all the block deals which are happening non-stop as well. Neha Agarwal is MD and Head of Equity Capital Markets at JM Financial Institutional Securities, and she's with us to take some questions. Neha, good morning. Good to have you with us here. Thank you for your time. So demand is there, and, of course, supply is rising to match it. Just a quick word on Hyundai first, if you will. $3 billion, whenever you have a large issue comes and markets have already done very well, people use historical sort of, stories about large IPOs and how they've kind of acted as a bit of a issue for the market. How would you look at it? So the basic question is, will this kind of supply overwhelm demand, or you think the market will just sort of deal with it and move on? What's your sense?
I think, Prashant, every supply of paper in the Indian markets is making its own demand. I would look at it in a very different lens. I think what we're witnessing right now in India is unprecedented era of economic development. Just look at the macroeconomic stability, the pro-business policies which are coming through. All the FI inflow mind share which India is attracting is one of the highest. So it really, every paper, whether it's IPOs, QIPs, blocks, are making massive demand history. Look at Bajaj Housing, right? It made history in the kind of demand it got through. Markets are stable. It's doing extremely well. Similarly, I think Hyundai also will not be an aberration to the market. You're going to see huge reception both from the FII and the domestic community for these transactions.
So, it gets absorbed and we move right back on, right? Or you think it could, I'm talking about the next, say, 2-3 months or so. You got many others, like Vari is coming. There is the NTPC green issue, which is coming. Of course, the two that I already mentioned. Do you think the ask price will be secondary markets consolidated a little bit, or you think, what's your sense there? Yeah.
I'll give you two data stats, right? If you see first half of financial year 25, we've already clocked in about $8 billion of IPO and about $7 to $8 billion of QIP, which is in a way akin to primary capital raise, right? Because all of that money is going into the balance sheets of companies which are looking for growth. So $15 billion of equity inflows, equity of supply of paper has come through in first half. And the way we're seeing pipeline is another $20 billion of IPOs and another $10 to $15 billion of QIPs in the offering for the next 6 to 9 months. And if you ask me, the most intuitive question will be, is there enough demand for these kind of papers? And my answer would be yes. Because as long as it's sustainable business models, as long as the cash flows are strong, great management team out there, investors have been extremely receptive.
Neha, just one question. So take all that, right? I mean, let's just talk about the IPO. IPO funds which are being raised. Have you looked at how much of the money which is being raised is going into the company? How much of it is growth capital? How much of it is investors getting an exit?
Yeah, so the first half of this financial year, it was actually 50% of primary and 50% secondary. But what I'm seeing in all the latest offerings that we're doing, I wouldn't be wrong in saying a very high delta towards movement towards primary capital, which is growth money actually going into the company, which could be in mirroring a deleverage to growth strategy. A lot of deleverage is happening, is a lot of growth capital expenditure which is coming through. Half would be at least 60 to 65% of primary raise, which is growth capital through IPOs.
Okay, got that. So
Prashant, I don't think we should forget QIPs because QIPs is all about primary raise, right? And actually, first half, we saw more QIPs in Indian markets than IPOs. And I think that trend will continue. Because a lot of capital expenditure comes through QIP. Sorry, Prashant.
So from here to the end of the financial year, what's the pipeline according to you looking like? IPOs and QIPs?
Would be about $30 billion at least.
20, so both put together? 30.
Yeah, so at least 15 to 20 of IPOs and another 10 to 15 of QIPs.
Okay, this is till March 25, right?
March 25, yeah. We've already done about 15 in the first half and another 25, 30 to go.
Wow, it's going to be a big year. And what's the, when you speak with the investors and pitch it to investors, etc., all these issuances, where is maximum interest? I mean, is it everywhere? Are there any sort of hot areas? I mean, in the US, for example, the big overriding theme is AI. Are there any themes here? The thing about India, of course, is there is so much, right? So many sectors, so many new emerging sectors, old, new, everything. I mean, but are there any preferences investor-wise?
So before I get into the sector thematics, I think one thing which is driving a lot of cornerstone conversations is the big E, which is your earnings. 2 years back, we were seeing a lot of price to sales, IPOs getting valued off revenue. But I think pragmatism has come through. There's been constructive conversations around earnings. And now it's more about EV, EBITDA, and price to earnings. So a lot of businesses which emulate earnings trajectory, where there's unit profitability, there's cash flows, investors are getting a much higher mind share into that. Coming to sectors, I would think renewables is one sector apart which is getting a lot of interest. You will see more than $4 to $5 billion of fundraise in this sector. It could be via IPOs or QIPs, because one thing is that the IRR metric of this sector is phenomenal now. So investors are far more receptive to understand this sector. There's great interest from foreign institutional investors also. So renewables is one space. The other one would be overall manufacturing. I think that will be the key theme, even overriding this sector. It could be in the form of precision equipments, autocoms. We did a couple of QIPs last week, which was in the autocom space. Phenomenal response. I think the trend will continue for these two sectors as we speak.
All right, Neha, we'll leave it there. Great conversation and great insights. Thank you very much for joining us here on CNBC this morning, and look forward to our next one soon. Well, we'll take a quick commercial break here. We're going to just look at the market for a quick bit before we do that. I think 44 higher on the Nifty, 26,050 is where we stand at. So take that break. Mitesh is going to be back with us for some technical ideas. Stay with us.
Welcome back. So let's quickly look at the market and get some more trades going with Mitesh. Mitesh, how are things appearing now, and what are the individual calls you'll go with at 10?
Yeah. So things are pretty okay. Both the indices were quiet in the opening and they've kind of pulled back again. So I think it looks pretty good to me. As I said, I think, declines to about 25,850, 880 is the buying zone. And maybe if it moves higher, we'll look at a higher trailing stop loss level. That is also your trailing stop loss level. And IT, I think, is picking up pretty nicely. So there could be some movement there in the IT stocks. I have a buy on HCL Tech for targets of 1820 and a stop at about 1780 can be looked at. And the other one is ITC, which is just on the verge of making a fresh high. So buy here once it crosses day's high of 523. Take a stop at about 516 and look for targets of 540.
Okay, all right, got it. Thanks for that, Mitesh. We'll touch base with you again during the course of the day. Right now, let's look at Trent. This stock's up about 3%, and it seems that there's some favorable brokerage commentary that seems to be supporting it. Nimesh, what's up?
Well, Shirbi, there are a couple of reasons why the stock is buzzing in trade. Don't look at today's 3% move, but look at what the stock has done in the last 1 year or so. It's been a big outperformer, almost 2.8 lakh crores of market cap now. So that's the kind of company that's been now Trent. As I said, a couple of reasons the stock is buzzing. The first one being, Citi has put out an initiating report on Trent. They've initiated a buy with a target price of 92.50. They are the most aggressive as far as target price is concerned. Now, Trent has, and they've actually added Trent to their Pan-Asia high conviction buy list, so focus list. So that's the reason why Trent has been buzzing. As far as company is concerned, the company has seen a big transformation from a single format to a multi-format and a multi-category company, which has led to a revenue CAGR of almost 36% in the last 5 years. From here on, for the next 4-5 years, Citi sees a revenue, EBITDA and PAT CAGR of around 40 to 50%. So that's the kind of growth that Trent is likely to report. That's the first reason. The second technical reason is Trent is getting added to the Nifty effective from tomorrow's close. Now, I was looking at some alternatives notes, and most of them are suggesting that this will lead to an inflow of close to $670 million, which is equivalent to almost 74 lakh shares. It's a thinly traded stock, so you need to see if there is a big supplier who can provide this kind of liquidity tomorrow when it's get added to the Nifty. So, as I said, two specific reasons the stock is buzzing. One, the Citi initiation, and two, the technical reason that the stock is getting added, which will lead to an inflow of close to $670 million.
All right. Thank you very much, Nimesh, for that. That's an interesting one. Appreciate it. And thank you for getting us that. 3% higher on Trent, and what, of course, has been one of the best performing wealth creators over the last couple of years now. We'll take a break. We are back. It's The Economy with Lata, and we'll connect with Aishwari Khandelwal of India Ratings and Research, and also Alok Misra of Microfinance Institutions Network, and we put the spotlight on the MFI space and the troubles there. Stay tuned.